We just have a quick question here from Amir asking us, how do we go about determining our entry and exit levels on the charts? Now, Amir, there's a couple of things that we use on a daily basis. What's important to take note of before we start is that the levels that we set out on the charts for probable entry areas and exit areas are based on a couple of factors, but they are still just a high probability zone, right? So it doesn't mean that the price must and will always react from there, that the price will always reach there or bounce from specific levels. It's based on all of the analysis that we've done, and that is the highest probability areas based on that particular chart, based on that particular sentiment, that particular day, that we think is the highest probability opportunity of reacting from. Now, the various elements that we use, we try and keep things very, very simple, so that it's easy for mostly all traders to replicate in their own analysis as well. Some of the most basic things we use is just traditional support and resistance structures. So if we just quickly take this Aussie US dollar chart, we can see that we've had this overall resistance area. Let's mark it out with a horizontal line. We've got this overall resistance, and we also have some support coming in on this zone. And we also have this most recent resistance also coming very close to that zone. So we can use that as a high probability opportunity zone in terms of expecting resistance from this pair. So we had it as resistance, then it turned to support, acted as resistance. So the highest probability expectation when it reaches back to this level obviously will be resistance. Then apart from that, apart from just normal support and resistance, we have another one going up there with some resistance and support seen there. We can also use the psychological price levels as another way, another element to use. Now, psychological price levels will be your round number. So let's take the 64 handle. So let's put in the 64 handle there. We can also put in the 64. Let's rather put in the round numbers first. Let's put in 63. We can also put in 62. And then apart from that, we can also put in the mid level. So let's take that one, 63.50. And we can also put in 62.50. Let's just put that one in as well. Apart from just normal support and resistance, you can also add in something like your psychological price levels. We can see in today's example, we've got confluence with a couple of factors here. The first one obviously is the support and resistance structure that we highlighted. We also have the 63.50, which is a psychological level, and as well as the ADR, which is another element that we can use, giving us a high probability zone here of expecting resistance on this pair coming in at that zone today. To the downside, we've got this support and resistance structure also with the 62.50. Even though we have the ADR coming in a little bit lower, it's also seen at a support and resistance structure. We also have a psychological level there. So that is also another area that we can consider for the pair. Now, apart from that, we also look at the fair value area. So if we take a look at this chart, the most recent fair value low that this chart has made has basically been this low from today's session. So this gives us the highest probability expectation of support for this pair for today. But I mean, nothing. This isn't a concrete wall that the market will slam into. There's a high probability that it can just break through and reach that next level as well. But that's just a couple of factors that we use. So it's basically support and resistance structures, as well as psychological price levels. We also use the ADR, fair value areas, quite a number of elements that we use, and we try to find zones on the chart that has the most confluence with most of those factors included. So I hope that helps. If there's any other questions, just let us know.